I don't own gold because I think it might go up to $3,000. I own gold in case it goes to $10,000. And in that circumstance, I'll be very happy to have a financial asset that I can be long for which there is no short, there is no counterparty risk. That's what I mean by insurance. In a world like today, and we're here at an investment conference, we're thinking mostly investments. And I don't mean to beat up on Trump, but things that he's working on could go wrong. Negotiations in Europe, who knows how well he really knows Putin? What if things don't go the way he expects?
In today's unpredictable economic climate, gold continues to draw significant attention as both a safe haven and a strategic investment. Recent market trends highlight this growing interest, with gold prices surging to a new weekly high of $2,773 to $2,774 during European trading hours on Thursday. This upward trend has fueled speculation regarding gold's future, with some analysts suggesting it could reach $3,000 per ounce by 2025. Renowned mining analyst Lobo Tiggre presents a compelling approach to investing in precious metals, emphasizing the importance of leveraging market volatility. Following the advice of Doug Casey, he suggests that investors should make volatility their ally. Tiggre explains his perspective, stating, "I don't invest in gold simply because I expect it to reach $3,000, I hold gold as a safeguard in case it skyrockets to $10,000. While the $10,000 projection may seem ambitious, many experts find a $5,000 target by 2030 more reasonable, given current inflationary trends. Tiggre stresses that gold is more than just a speculative asset, it serves as a fundamental store of value and a form of financial security, especially in uncertain times. This viewpoint aligns with legendary investor Ray Dalio's insights on gold's role in portfolio diversification. Dalio highlights how incorporating gold can enhance portfolio returns without relying on any specific asset class. He likens owning gold to holding an insurance policy, offering vital protection during periods of financial instability. Historically, gold has consistently demonstrated its ability to preserve wealth during economic turmoil, making it a reliable hedge against inflation and currency fluctuations. Given its proven track record, many investors view gold as an essential asset rather than a mere investment or speculation.
I think gold is an absolute essential, but it's not a play, it's not a speculation, it's not even investment. It's a hard asset, it's savings, it's insurance, and I think in volatile times, that's more important than ever. As far as making money goes, my mentor Doug Casey used to say, make volatility your friend. So a couple ways you can do this. The simplest way is just to, if we expect volatility, you look at the things that you want to invest in, the things you have confidence in, and then you wait for these big fluctuations and you buy at that point. Another strategy that we've been using in the newsletter is you can sell puts. So you don't know what's going to happen. It's volatile, it's uncertain. But if something that you absolutely, company that's a grade A, tier 1, you really like this, but it's not on sale, well, maybe this volatility can be your friend. Yeah. So if you sell puts on it and nothing happens, you make the money from selling the puts.
Right.
And if you get put, there's some big shakeup in the market and you get filled at a lower price, well, then you take ownership of something that you wanted anyway. So this is how I'm thinking of 2025. I don't know what's going to happen. Nobody knows what's going to happen. We just know that we're going to see lots of up and down in the markets, and so I'm thinking about ways to take advantage of that volatility.
What's your underlying assumption behind this heightened volatility? Why do we have so much uncertainty after the Trump inauguration? I mean, we already know who won the election. It's Trump. We already know what he wants to do.
Well, but do we? We were told that we're going to be, tariffs across the board on day one. And now we have a memo.
That's right.
Researching tariffs, right? So things aren't even the surprises are starting already. My general approach is just to assume that things are going to fluctuate in big ways, and how do we take advantage of that? But then the other thing is, like with the gold comment, and you've heard Rick Rule say this, I'm sure he's told you on interviews with him. I don't own gold because I think it might go up to $3,000. I own gold in case it goes to $10,000. And in that circumstance, I'll be very happy to have a financial asset that I can be long for which there is no short, there is no counterparty risk. That's what I mean by insurance. In a world like today, and we're here at an investment conference, we're thinking mostly investments, and I don't mean to beat up on Trump, but things that he's working on could go wrong. Negotiations in Europe, who knows how well he really really knows Putin? Right? What if things don't go the way he expects? Or what if, he's successful in ending the war in Europe by letting the Russians win? Like you cut off funding to Ukraine and Putin takes a chunk of it. What does that tell Xi over in China about Taiwan? Right? If the U.S. is going to back away from allies, then that, it seems to me, would encourage other adventurous, powerful forces to sally forth. This is a world in which I think even the average Joe, who isn't a gold bug, would think about, maybe a little bit of insurance isn't a bad idea.
Yes.
But as far as making money in the markets goes, since I don't know which way the markets are going to go, that's why I'm talking about being prepared with stink bids in case of big fluctuations, things like selling puts. That's how I'm thinking.
On the economic front, Tiggre highlights how fiscal dominance has played a key role in preventing a severe recession in 2024. High government spending and persistent inflation have kept the U.S. economy from experiencing a more drastic downturn. However, global recession risks remain, with forecasts indicating an increase in the probability of a downturn from 35% to 45% by the end of 2025. Despite signs that the U.S. economy is achieving a soft landing where growth slows without triggering a recession, Tiggre maintains a bullish outlook on commodities and precious metals. His reasoning is rooted in expectations of sustained inflation, which historically supports gold and other hard assets. The Federal Reserve's monetary policy reflects these concerns, as analysts predict that interest rates will remain between 3.75% and 4% to control inflation rather than stimulate growth. In an environment of economic uncertainty, gold remains an essential asset for preserving wealth. With modest economic growth expected and inflation gradually easing toward the Federal Reserve's 2% target, gold's role as a financial safeguard becomes increasingly vital. What are your thoughts on gold's future? Will it continue to serve as a reliable safe haven? Let us know in the comments below. We'd love to hear from you. If you found this video valuable, don't forget to like, share, and subscribe to our channel for more insights into financial markets and investments.